This is just out. Sam Bankman-Fried's Substack, and he's going to say who he blames for the collapse of FTX. Today is January 12th, 2023. So in summary, in mid-November, FTX International became effectively insolvent. The FTX saga, at the end of the day, is somewhere between that of Voyager Digital and Celsius. Three things combined together to cause the implosion. Remember, this is all Sam Bankman-Fried saying this. Over a course of 2021, Alameda's balance sheet grew to roughly $100 billion. $100 billion of net asset value, $8 billion of net borrowing or leverage, and $7 billion of liquidity on hand. The Alameda failed to sufficiently hedge its market exposure. Over the course of 2022, a series of large, broad market crashes came in stocks and in crypto lending to a 80% decrease in the market value of its assets. C. In November 2022, an extreme, quick, targeted crash precipitated by the CEO of Binance made Alameda insolvent. So let's take a look at that for a moment. CNBC writes, in a Thursday morning Substack post, FTX co-founder Sam Bankman-Fried denied allegations that he stole billions in user funds and suggested that the Binance CEO, Changpeng Zhao, otherwise known as CZ, conducted a months-long effort to bring down FTX. Today's Substack post is Sam Bankman-Fried's first significant response to federal allegations that he directed an $8 billion fraud that destroyed his $32 billion crypto conglomerate. Remember, this is all alleged. He's going to be going into court about this in October 2023. So earlier this month, SBF pleaded not guilty to 8 federal charges, including fraud and money laundering, and was released on a $250 million bond. His trial will begin in October. Bankman-Fried is the subject of complaints from the Securities and Exchange Commission and the Commodity Futures Trading Commission as well. In the Substack post, it provides his perspective on the collapse of FTX and his hedge fund Alamada Research. So getting back to this, in November 2022, an extreme, quick, and targeted crash precipitated by the CEO of Binance made Alamada Research insolvent. So Sam Bankman-Fried goes on to say that, and then Alamada's contagion spread to FTX and other places, similarly to how Three Arrows Capital, etc., ultimately impacted Voyager, Genesis, Celsius, BlockFi, Gemini, and others. Despite this, very substantial recovery remains potentially available. Okay, this is important. He's still saying that recovery is potentially available. FTX US remains fully solvent, according to Sam Bankman-Fried, and should be able to return all customers' funds. FTX International has many billions of dollars of assets, and I am dedicating nearly all of my personal assets to customers. So where is the money? Sam writes, this post is about FTX International's insolvency. It's not about FTX US because FTX US is fully solvent and always has been. When I passed FTX US off to Mr. Ray and the Chapter 11 team, it had around $350 million net cash on hand beyond customer balances. Its funds and customers were segregated from FTX International. It's ridiculous that FTX US users haven't been made whole and gotten their funds back yet. So what do you guys think about this? Here are Sam Bankman-Fried's record of FTX US's balance sheet as of when I handed it off. So here are the numbers. I'm not going to read them all. You can just press pause and go over it. Sam Bankman-Fried is arguing that FTX International was a non-U.S. exchange. It was run outside of the U.S., regulated outside of the U.S., incorporated outside of the U.S., and took non-U.S. customers. In fact, it was primarily headquartered, run from, and incorporated in the Bahamas as FTX Digital Markets Limited. So here's how I think he's going to try to perhaps make his case that FTX US, it's solvent. So what's the problem? At least that's how he sees it. FTX International, it's almost like it's no business of United States. That's my take on it. He goes on to talk about how some senators have raised concerns about a potential conflict of interest from law firm Sullivan and Crowell. Also, despite its insolvency and despite processing roughly $5 billion of withdrawals over its last few days of operation, FTX International retains significant assets, roughly $8 billion of assets of varying liquidity as of when Mr. Ray took over. In addition to that, there were numerous potential funding offers, including signed LOIs post Chapter 11 filing totaling $4 billion. I believe that had FTX International been given a few weeks, it could likely have utilized its illiquid assets and equity to raise enough financing to make customers substantially whole. I remember when he filed for Chapter 11 bankruptcy, it was like the next day he regretted it. He said he was sort of pushed into it and that he could find the money. Well, I also remember that he had to ask. He was going out asking for more investors to put money in. So would that have been a case of just borrowing Peter to pay Paul? I don't know. But according to him, he could have made everyone whole had he been given more time. Since S&C pressured FTX into Chapter 11 filings, however, I worry that those pathways may have been abandoned. Even now, I believe that FTX International were to reboot, there would be a real possibility of customers being made substantially whole. Sam goes on to say, I didn't steal funds. I certainly didn't stash billions away. Nearly all of my assets were and still are utilizable to backstop FTX customers. FTX International and Alameda were both legitimately and independently profitable businesses in 2021, each making billions. And then Alameda lost about 80% of its assets value over the course of 2022 due to a series of market crashes, as did Three Arrows Capital and other crypto firms last year. So he's making it sound like this is just one of many crypto exchanges that went down and it was just like that. Note that in many places here, I'm still forced to make approximations. Many of my personal passwords are still being held by Chapter 11 team, to say nothing about data. If the Chapter 11 team wants to add their data to the conversation, I would welcome that. Also, I haven't run Alameda for the past few years. Much of this is pieced together post hoc, coming from models and approximations, generally based on data that I had prior to resigning as CEO and modeling and estimates based on the data. That makes sense. He doesn't have access to it, so he's just kind of guessing and remembering. I'm going to put a link below to this article and you can go check it out yourself. So in the rest of it, he talks about an overview of what happened 2021, 2022, big overview. And you can check this out yourself. Market crashes, basically reasons behind what happened to FTX and Alameda. He's making his case, so you might want to check that out. It's huge. There's a lot to go through. And again, he makes it clear he's going from memory. He doesn't have access to really anything. So this is his side. I have a lot more to say about why Alameda failed to hedge, what happened to FTX US, what led to Chapter 11 process, S&C, and more. But at least this is a start. So we'll probably be hearing more from him. You know, the problem with this for him is that the more he says, the more he puts out there, it's going to be harder to backtrack once he's going to go to court. So I don't know why he's putting this out, but he is. So have a look at it. None of this is financial advice. If you like what I put out, please hit that like and subscribe, and I'll catch you guys in my next video.